Welcome everyone to this Nadex webinar, What are Binary Options? I'm thankful that you're all here joining me today. And I just want to cover a couple of quick housekeeping items before we get going. One, this session is being recorded, so you will be able to review this session at your leisure later. Hopefully the recording will be available later today. You'll be able to find that both on the Nadex website as well as the Nadex YouTube channel. I will go back to that YouTube channel. I'll show it to you. If you're not subscribed, I would encourage you to do so. We do a live stream every morning where we take a peek at what are potential hotspots in the markets for that day, and it can help you focus on where might you want to be looking in the markets, but you'll also find a variety of other educational content on the Nadex YouTube channel. Also, on the right-hand side of your screen, you'll notice there's a little question mark. You may or may not have clicked on it so far, but you can open that up. And if you've got a question as we're going along today, please type in your question. I will do my best to answer the questions as we go. And there's a high likelihood that if you've got a question, somebody else has it as well. And I want to make sure I'm describing everything and making the best use of this time while we're all here. All right, before I really get into everything, I do need to share this disclaimer because this session is sponsored by the Nadex Compliance Department. And that disclaimer is that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe what I'm saying as a buy or sell recommendation. This is purely for your education. And that will become abundantly more clear when I do the section of the webinar, which I like to call off-roading, where we will get into the platform and I will do a practical demonstration of what we've covered so far. A quick little introduction so that you know who is speaking to you. And if you come in the mornings, you'll get to know me a whole lot better. My name is Todd Rich. I am with Nadex. I'm the head of education. I joined Nadex in 2019, and it was truly the continuation of an extensive career in trading and financial services. I spent just shy of a decade on the trading floors as one of those people that yelled frantically and waved their hands. Those folks there's not many more of them left. In fact, the trading floors are all disappearing. I did move from the trading floor into the exchange and brokerage space, which is a hybrid of what I do here at Nadex because we are both, but I've spent years at Eurex, which is owned by Deutsche Börse, a large exchange out of Frankfurt, Germany, Boston Options Exchange, which we rebranded as BOX, the New York Stock Exchange, and E-Trade. I did grow up in California, and I've got both my BA and my MBA from UCLA. So just a little bit about me, just to give you some ideas of where I am coming from. So what are we actually going to cover today? And our agenda, one, I am going to spend a couple minutes on who is Nadex. Y'all are here today because you want to access price action in the markets. And I do like to just give a little clarity on who is Nadex and why do we exist and what is it that we offer, because it probably is in line with what you are looking for. And then we're going to get into the topic of the day, which is what is a binary option? We're going to talk about a binary option. We're going to talk about how they work, the risk that you take if you trade a binary option, and the potential reward. And once we understand that, we can take a look at how the price of a binary option changes, and it will change as the price of the underlying moves around. And we'll talk more about what that price of the underlying is, as well as time. We'll talk a little bit about the variety of choices you've got at Nadex. And then, as I mentioned, we are going to do a very practical demonstration on the platform so you can see them in action. So that's our plan. Please, again, I want to remind you that if you've got any questions, please type them in on the right-hand side of your platform. You'll find that under the little question mark. And I will, again, make best efforts to answer them as I go. I will take a peek back at the end to see if I might have missed anything. So let's go ahead and start off with who is Nadex? Now, Nadex is simply an acronym. We love our acronyms in the financial services space, and it's short for North American Derivatives Exchange, which is a bit of a mouthful. But what's really important is that we are a proper regulated exchange in the United States. We are regulated by the CFTC, another fancy acronym. The CFTC, that's simply the Commodity Futures Trading Commission. It is the same regulator that oversees very large exchanges like the CME, the Chicago Mercantile Exchange, or even ICE, the Intercontinental Exchange, who owns the New York Stock Exchange. If you didn't know, the New York Stock Exchange actually got bought. So Nadex is a proper regulated exchange. It's not something that they simply give out lightly. And one of the reasons I really like to mention that we're regulated is because if you go online and you look up binary options, you might find other providers out there on the internet. Almost all of them, there are only 3 that are regulated in the United States. One only has weather contracts and they don't trade very frequently. The other one is a new exchange. But that all being said, all the other ones, they're offshore providers. And you'll also see that there has been some nefarious behavior in the binary option space historically. And it's unfortunate because that is, it's really been a challenge. We're a regulated exchange. All of those problems that you see simply don't exist at Nadex. You can put your money in, you can take your money out. We are fully regulated. We have to adhere to all the laws, rules, and regulations of the United States. We have a regulator who audits us and oversees us. And if you were to go to an offshore provider, I would simply say, caveat emptor, buyer beware. If you were needing some type of recourse because there was a challenge or a problem, you may or may not be able to find resolution because there's nobody that oversees them. With Nadex, we are a proper regulated exchange in the United States. None of those nefarious behaviors go on at Nadex. That's simply the way it is. Now, why does Nadex exist? And this is becoming an increasingly popular, and this is why we've got so many people on today. Retail traders are coming into the markets. They're looking for price action. They're looking for trading opportunity. And there are so many folks who felt they've been precluded from ever participating in this because it appeared to be a big boys game where you had to have tons of money and there was undefined, unlimited risk where you could potentially lose everything that you've got. At Nadex, we built contracts specifically for the individual retail trader. Our contracts have a low cost of entry. The notional value, the actual dollar value of our contracts is small, and every single one of our contracts has very, very clearly defined risk before you enter a trade so that there are no surprises. You can't lose more than what you initially put into a trade. So you can't blow up or blow out or lose your entire account because you didn't know what was going on, or lose everything you've got because you didn't understand. At Nadex, it's designed for those retail traders that want to have that clearly defined risk, but they want to access price action in the markets. We have truly democratized that. And we have binary options. We also have knockouts and call spreads. If you're not familiar with those, we do other sessions specifically for them. But today it's going to be strictly about binary options, and it's for people who are looking for short-term price action in the markets. Now, that is Nadex. Let's get into, oh, by the way, I always forgot that I have this in here. If you're new to Nadex, or even if you've been around for a while, something that a lot of retail traders like to do is they like to trade with their friends. They like to do it. It's a bit of a social activity. If you refer your friends, if you open a Nadex account, you will get your own personalized link. If you share that link with your friends and they open an account using that link and they place 5 trades within 30 days of applying for their account, they will get an extra $100 put into their account, and you will get $100 put into your account. They get $100, you get $100, everyone gets $100. I love that one. And you can do that with up to 10 of your friends. So you could personally end up with $1,000 of trading capital in your account simply by bringing your friends in. And then, often traders do like to work together. All right, let's get into binary options. And first up, we're going to define a binary option. And the definition is it's a short-term defined risk, defined reward contract that is made up of 3 components. Binary option is quite frankly a fancy word. It's a fancy word, and if I were to call them a prediction, in fact, other places you might even see that out there, prediction markets and binary options are identical. If you're looking at a prediction market where you are predicting something and you look at a binary option, they are the same. And what these are is they're simply a statement. And that statement has 3 components to it. There's a market, an underlying market. I am going to use an example. I'm just going to use a generic example. I'm going to use, you know what? Let's use gold. I'm just picking one out of the air. If anyone, and by the way, if you want to type into the question section when I go to the platform, if there's a particular product you would like me to look at, like, oh, take a look at this foreign exchange pair, look at this equity index, the NASDAQ, the S&P. Ooh, take a look at oil. I'm really interested in oil. Type it in and I'll use it as an example. But there's an underlying market, and for an example, I'm simply going to choose gold for the moment. And then there's a condition. And sometimes that condition is called the strike price, another fancy word, or the level. And then there's always a time frame on it. There is an expiration time. So you've got this prediction that is made up of 3 components: gold, a condition, which is a price, and an expiration time. Before I go into that, I'm going to give you an example, and this is why I call it a prediction market. Will gold be higher than $17.80 an ounce in the next 2 hours or at the end of the day? That is a prediction. You're either going to predict that gold will be higher than that price or not higher than that price. Okay, that is a binary option. And the reason it's a binary option is because in the end, and remember that, just in the end, it's either going to have one of 2 outcomes. Now, what's interesting about binary options is it doesn't matter whether you're buying or selling them. And that's something that's different at Nadex, where you can buy a binary option, you can also sell it. And we will talk about that. But it doesn't matter whether you're buying it or you're selling it. Your risk as well as your reward are both capped, meaning they are both known quantities before you enter a trade. So you know exactly what you're potentially getting into before you enter the trade. Now, a binary option will trade, and the price of a binary option, it's a number, and it will be a number between 0 and 100. And in the end, it will go to either 0 or 100. And we're going to talk about that in a second. That's why in the end, that's why they call them binary options. There's only 2 outcomes. It goes to 0 or it goes to 100, but that's only in the end. And there's a reason why I keep saying that. I'm teasing it out there. I've got a pearl of wisdom at the end of this presentation that I'm hoping you just kind of hang on to and you go, aha, at the end. All right, so we've got a binary option. It's a short-term contract. It's a prediction that is made up of 3 components. Will gold, will oil, will the euro US dollar, will the S&P 500, so some market, be higher than a price? That's the condition. It's a price or a level. Will it be higher than? Will the euro US dollar be higher than 1.17? And then there's a time in the next 5 minutes. You can get really exciting. We'll talk about that too. The next 20 minutes, the next hour, the next 2 hours, today, at the end of the week, you can pick and choose. That is also something that is differentiating at Nadex, is you've got a variety. So when I mention that a binary option trades between 0 and 100, in the end, it's a true or false prediction. Either it happened or it didn't happen. All right, that's it. And If the statement ends up being true, it will go to 100. Okay, and we're going to talk about what 100 means in a second. And if the statement is false, it goes to 0. So in the end, you've got a prediction, a market, a strike price, a time frame, and at the end of that time frame, did the statement come true or did the statement become false? And it will either go to 100 or it will go to 0. Now let's talk about what that number represents. So when you're looking at trading a binary option, what are you actually trading? And we made it easy at Nadex. I'm going to give you the first part, and then I'll give you the dollar part. When you're looking at a binary option, you can actually think of that number as the probability in the end that the statement is going to be true as determined by the marketplace. So there are market makers out there who will make a market. What's the probability that the statement is going to be true? There's also a bunch of other people who have differing opinions. Some people think it's going to be true, and if you think it's going to be true, you buy it because you want it to go to 100. Or they think it's going to be false, and they might sell it. They're going to sell it because they think it's going to 0. That is something that is cool about Nadex. You can predict either whether it's going to be true or whether it's going to be false. You can buy it if you think it's going to be true. You can sell it if you think it's going to be false. And essentially, it is the probability. It is a probability. So, for instance, let me go back to my gold example. Will gold settle higher than $17.80 an ounce at the end of today? If gold were trading right now at $17.80 an ounce, okay, so it's right at the condition, it's right at the strike price. The market doesn't know if it's going to ultimately settle higher or if it's going to settle lower. In fact, there's probably an equal probability, an equal chance that it will do either, in which case you would expect to see the price of that binary option to be around 50, meaning there's a 50% chance that it's true or a 50% chance that it's false. And that should make sense. Now, if my prediction is, will gold settle higher than $1,800 an ounce, and it's currently at $17.80, well, it's already below the prediction. It's already below, it's got to go up to 1,800 for it to even be 50-50, in which case you would expect the binary option to be less than 50. The market would probably say, hey, maybe at this point, there's only a 40% chance. And it would trade for 40 because it's got to go up to 1,800 and settle above it in the end for it to be true and go to 100. So, and conversely, if it was, if the prediction were, will it be higher than $17.80 an ounce, and gold were already trading at 1,800, so it's already higher, you would expect the probability of it being true, because it's already true at this moment, it would probably be higher than 50%. It might be, say, at 60% chance. They're saying there's a 60% chance it'll be true and go to 100. And in the end, if it is higher than that price, every binary option where the prediction was that it's above the prediction, they'll all go to 100. And they can only go to 100. And if any place where it finished below and it's false, they would all go to 0. Now, what's interesting about binary options, and if you happen to trade other listed options and you're not familiar, but time to expiration and volatility will be factored into the price of that binary option, of that prediction. If it's moving volatility is high and it's swinging, the price of the underlying is going up and down and all over the place, the probability of it finishing above any one of those numbers might be a little bit higher because they don't know where it's going to finish. In a low volatility, it might not move very much, and that would also be factored in. And time to expiration is critical. If there's a lot of time left, the price of that binary option is going to accommodate for the fact that there's still a lot of time for this to potentially be true or potentially be false. But ultimately, since it's the probability of it being true, that the price you're actually looking at, there's a lot of time for that. And if there's very little time, it will account for that as well. And I'm going to go through some examples of that before I jump over to the platform and show it to you in action. Now, I mentioned that number represents two things. Now, one, it's the probability. If you understand that it's the probability, hey, I'm predicting that this is going to be true. We made all of our binary options a maximum value of $100. So not only is it the probability of it being true, it is also the dollar value of the contract. So because a binary option at Nadex will trade between 0 and 100, and the total contract value is 100, in the end, if it's true, and I'm just going to leave this up here and you can take a look at it. In the end, if it's true, it will go to $100. And in the end, if it's false, it will go to $0. So if you buy a binary option, all right, if you're a buyer and which is really the collateral, how much money do you have to put up to trade a binary option? That is the collateral, is the maximum risk on a trade. If I'm buying a binary option, what I pay for it, I can't lose any more than that. So if I buy a binary option for, and I'm just going to use an example, 30, there's only a 30% chance that it will go to 100, at least according to the market. Now, your prediction is your opinion and that's your prediction, but I would only have to pay $30 for that contract. That is the most I can lose. If I bought it, the worst case scenario is it goes to 0 because it's false, and I can't lose any more than the $30 I put in. But what could I make? My reward for buying a contract, if I paid 30, it could go to 100, in which case I predicted wisely, and remember, it just has to finish 1 penny or more above that price, and my binary option is true. It goes to 100. I get $100, in which case I paid $30. I got $100. I made $70. So I risked 30 to potentially make 70 because I thought it was going to go higher. Now, you can predict that it's not going to go higher. You actually have that choice that say, I think it's going to be false. And let's say you said there was a binary option trading at 30. You could sell it. You could sell and say, I do not think it's going to go up and finish above that price. I think it's going to finish below that price. I could sell it at 30. I'm predicting that in the end it'll be false. If I sell it at 30, the most I can make, my reward, my maximum reward is $30. I'm selling it at 30 and I'm hoping it goes to 0. Now, what am I actually risking? If I sell one at 30, it could potentially go to 100. It could potentially go to 100. So my collateral, that would be $70. I would have to put up $70. If I sold one at 30, I'd have to put up $70. Now I can't lose any more than the $70, but I can only make $30. Now some people say, why would you ever do that? Why would you risk 70 to make 30? Well, if you actually look at your return on your investment, you're still returning, what is that, around 40%. And there's the probability that you're going to be true is pretty high, right? Because there's only a 30% chance that it'll go to 100. There's a 70% chance it's going to go to 0. So you can buy or sell them. It is the probability of the statement being true, and you can control how much you risk, and that's the collateral that you put up to initiate the trade, and you can never lose more than that. All right, so are there any, and I think there was one question, and I think I answered it. If anyone's got any other questions, if I'm not being clear about it, please type them in. I'm more than happy to answer them, because I want to move on where I walk through an order ticket, and because all of that math that I just sort of walked through in my head, we do it for you on the order ticket. You can actually look at it and we tell you. In fact, we tell you the probability that your trade's going to be in the money. We tell you the maximum return on investment that you could potentially make. We calculate all this for you on the order ticket, and whether you're buying or you're selling, I will show you some other examples on that as well. But let's go ahead and start off with an order ticket where this is the S&P 500. And you can see that there's an indicative price. On the order ticket, it said the S&P was currently trading 43.50 spot 63. Actually, spot 63.1, if you want to be exact. So I know that it's 43.50 and 63 cents. Now, it also tells me an expiration time. There was an hour and 23 minutes left in this particular contract. And then it gives me the condition. And the condition was, will it finish? Will the S&P finish higher than 43.54.5? Now, 43.54 is above the current indicative price. Well, if it's got to get up to 43.54 just for it to be a 50-50 chance, we're already below it. You can see that the probability is in the low 30s. The market was saying right now at this moment in time, it's around a 34% chance that this will go to 100. Now it can trade above, but it has to finish above for it to go to 100. Now, what's interesting, you will see a market on, there will be a bid and an ask where you could, the price you could buy it for and the price you could sell it for, but you don't have to try to trade on those prices. If I wanted to put an order in between the market, you're allowed to do that. Now, does it mean that someone's going to trade with you? Not necessarily. If I were to put a bid, and you can see since we are blue here right now, I'm trying to buy, and I'm trying to buy one for 35.50, that is between the bid-ask spread, I can put this bid in to try to buy one. Now, what'll happen is you'll see all of a sudden, instead of 150 of them, and that's what those numbers are in the upper corners, 150 are currently being bid for at 30.75. We would see one bid for 35.50, and that would be me. And if someone wanted to sell one, they'd have to sell it, or they could sell it to me. Now, does that mean someone's going to? Not necessarily, but I don't have to trade on these prices. I can use limit orders. If the market's moving quickly and you just want to get a trade, you can always use a market order. But you can put orders between the market. Now, what we do tell you, if I were to buy one for 35.50, if I know and someone sold it to me, that's the most I could lose when I'm buying. I just went through my maximum, my collateral and my maximum risk. I could not lose any more than 35.50. Now, what could I potentially make is if it went to 100, I would potentially make 64.50. Now, we do tell you at the bottom of the order ticket, if you're trying to buy one of these right now, the midpoint between the bid and the ask, that's the real probability. That's what the market is pricing the probability of it being true, is 33.75. And if I were to buy one for 35.50, I can make 166% return on my money in the next hour and 23 minutes if I bought it, paid 35, and it settled at 64. Okay, so we do all that math for you. And when I jump over to the platform, I'll show you an example of a sell order and how those numbers will change, and you can see. And when you play around, and if you don't have a demo account, I would highly recommend you sign up for a demo account. They're free, and you can practice and play around with it a little bit, and you can see how the probability of changes, whether I'm buying or whether I'm selling, and how your potential return on investment, whether you're buying or whether you're selling. Now, I mentioned that price and time the price of the underlying market and time, how that can change the value of a binary option. And I'm going to quickly walk through a single example. I will show, there will be two other examples that you can look at later in the recording if you would like to, but I don't want to spend a lot of time here because I'd like to get over to the platform and spend a little bit more time in a practical demonstration. But we mentioned that price can be thought of as the probability of the event being true, and that probability will constantly fluctuate. And that probability will fluctuate because the price of the underlying is moving up and down, because time moves in one direction for us, at least. And with the impact of time and volatility, you'll see the price of the binary option change. So let's go through an example. All right, and here's an example of the Euro USD. And the question is, or the binary option, the prediction, will the Euro US dollar be higher than 1 spot or be greater than 1 spot 14 at 3 p.m.? And here's a chart of what the Euro US dollar FX pair did during the day. Now, there's the 1 spot 14 level. So let's take a look at what actually happened. Early in the day, the binary option was already above the strike price. All right, so which we would call it's already in the money. It's already higher. So the market was pricing the probability at the end of the day that it would be about a 56% chance, that's the middle of those prices, that it would be higher, that it would finish higher than 1 spot 14. But early in the day, you can see it drop down. It went below. Now it's still very early in the day. And when it dropped down, it went down to a 44% chance. So you can see the price of this binary option fluctuating. Now you skip forward to about the middle of the day, and it's roughly in the same price. The Euro USD is about where it was earlier in the day, but notice now that the probability has dropped to 36%. What has happened? That is time decay. That is, time has gone by. It is still below 1 spot 14, and there's less time for it to potentially go higher and finish above 1 spot 14. And as we look forward, notice now when we move forward, it makes a much more dramatic price rise, price increase, probability increase. It actually went above 1 spot 14, and it's up at 74%. Now, why did it make a much more drastic move in the price of the binary option here? Because there's less time left in the day. So the volatility, as it moves up and down, the price of the binary option will change. Excuse me. And as time moves forward, that will also impact. I mean, now it moved forward, the market was only giving it a 24% chance, and there was very little time left, and it's below. Now, if it goes lower, it can only go to 0. The price of this binary option, if it finishes at that green line or lower, it's going to go to 0. If it goes above that green line, it has to be greater than that green line. It doesn't matter how much higher it goes. It can go to 1 spot 1401. If that's where it settles at expiration, it would go to 100, and anything above there would go to 100. All right, and in this case, it did. Now, I'm going to just show you what happens if it's not volatile at all. I mean, this was swinging all over the place. We can clearly see the price of the underlying of the Euro USD was going up and down. Here's the same example, but instead, you can see there's very, very little volatility, right? It never moved very much. And in fact, you can see as the day moves forward, it just sort of decays down toward 0. Now, one thing I do want to point out, notice here, we're at the middle of the day, and there's a 34% chance that it would get above 1 spot 14 and finish above 1 spot 14. But notice how towards the end of the day, it actually goes higher. The price of the Euro USD went up. It's gone up, but the price of the binary option actually went down. It went from 34% down to 20%. Now, why is that? Because now there is very little time left, and we are in a low volatility environment. The market just simply doesn't think it's going to spike up and finish above 1 spot 14. Could it? Yes, it absolutely could, right? In fact, there's a 20% chance that it still could do that, a 1 in 5, but there's an 80% chance it's simply going to go to 0, which it does in this case. And in a low volatility environment, you can see how it decayed down toward 0. Now, in a low volatility environment, if it stayed above the strike the entire time, it stays above the condition level, instead of decaying down to 0, it would decay up to 100. All right, and I'll let you go through that. If there's any questions on that, please type them in. I can cover it again later, but I do want to keep moving along because I do want to get into, the practical demonstration where I think when you see it, you go, I get it now. Everything you've explained to me makes perfect sense when I see it in action. Now, something that differentiates Nadex from all the other binary option or a lot of the other binary option markets is that, one, we've got a bunch of underlying markets. We've also got a variety of time frames and conditions, which are strike prices. So you can choose what suits you best. And if markets are really volatile, we may even add some on the fly. Now, here's an example of our 5-minute binary options, and we'll look at a lot more when we get over to the platform. But you can see for 5-minute binary options, we've got a bunch of different Forex pairs. And if you clicked into any one of those, you would see, so for instance, if you were looking at the Aussie dollar, the Euro US dollar, down here we got the pound, the British pound and the yen. Inside any one of these, and here's the Euro US dollar, we've got different conditions. And as you can see here, the euro is currently at 1.2133. Here is, will it be greater than 1.2113? It's already above it. That's the indicative price. So it's currently trading at a 60% probability. Notice that there's only 4 minutes left in this, but there's still a chance. There's this 3% chance that it would go all the way up to 121.15. A very little that it would get over 117, and they're giving it a very high probability that stays above 1.2111 because it's of where it is right now. But these numbers, these prices, these probabilities, as the euro moves up and down, these prices will move dramatically, and we will watch that. I'm going to get into an example, but that's something that you can pick the level that you think makes sense for you. Maybe you think well, we'll get into an example because you could do different, you can actually mix and match these binary options, but let's just keep it simple for the moment. The point here, though, is you've got a variety of markets, you got a variety of products, you got a variety of expiration times, and you've got a variety of strike prices. Now, that may seem like a lot, but when you look at it, you sort of figure out what works best for you, and the fact that you can customize your trade based on how you want to access the markets, it's really nice to have that flexibility. Now, I said this at the beginning that there was a morsel at the end, and I really want to emphasize this. If you noticed in the end, it can only go to 0 or 100. But if you noticed the journey during while that contract is trading, that price moves all over the place. It goes up and it goes down. And this is really important to remember, a very important rule. Just because there's an expiration tied to the contract in the next 5 minutes, in the next hour, in the next 2 hours, at the end of the day, at the end of the week, does not mean you have to wait until then to see what happens. You do not have to wait until the end to see what happens. You can choose to exit your position early if you want. Meaning, why would you want to exit a position early? Well, there's 2 reasons why you would want to exit a position early. One would be to lock in a profit. Maybe you bought a binary option for 20. There's only a 20% chance that it's going to finish in the money, but it quickly went right to at the money. So now we know that it's trading around 50. Well, you bought it at 20. Now you're hoping to make 80 because you'd like it to go to 100. But it goes to even money, it goes to 50, and you can then decide, do I want to stay in this trade, or do I simply want to sell it back at 50? I risked 20, I made 30 because I paid 20 for it and I sold it at 50, so I profited $30. Well, great, I just made 150% on my money. I risked 20, I got 50, 150. You might be happy taking 150% return. Take that $30 and then look to do maybe another trade or reassess. Maybe your opinion changes. Or you can just stay in it because you think it's going to go higher. Maybe you go, I want to sell it. I think it's going to finish higher, but I'm willing to sell it at 70. and take a $50 profit and get out of the trade. I'm not looking for that last $30 because we saw what happens. What could happen? You could actually be in the money and then all of a sudden in the last second or in the last minute, it could drop and you can watch your profits disappear. So one, you might want to exit to lock in profits. The other would be to limit losses. Maybe you bought one at 50. There's a 50% chance, or you sold, let's go the other way. You sold one at 50. You think it's going lower. You sold one at 50. You know it can go to 100, so you can lose 50. It can go to 0, so you can make 50. And instead, it keeps going higher, and you decided, you know what, I sold it at 50. It's now at 70. I don't want to lose all 50. Maybe I just buy it back for 70. I sold it at 50. I buy it back for 70. I lose $20. Do I have to watch it lose all 50? No. I can say I'm going to take my lumps. I'm going to cut my losses. I'm going to get out for a $20 loss and live to fight another day. You are allowed to do that also. So you can make some decisions. In fact, if you look back at that the chart where it was very volatile, you could have traded 3 times during the day, 4 times during the day. Who knows? You didn't just have to trade once and then wait and see what happens and wait for the outcome. You can get in and out of these as you feel your risk reward relationship changes that suits you best. So this is very important. Just because there's an expiration associated with binary options does not mean you have to wait to see what happens. You can exit a position early. And that is also something that differentiates Nadex from a lot of the other providers, is with a lot of the other providers, once you get into it, you're stuck with it. And you simply can't do anything, and you have to wait and see what happens. At Nadex, you've got that flexibility and the ability to exit your trade early if you want. Now, if you've got any questions for Nadex, I think I've answered them all as we've gone along. If you've got more, please email us, customerservice@nadex.com, whether it's about the exchange, whether it's about your account, whether it's about the platform, whether it's about putting money in or taking money out, whether it's understanding any of the products. Please, we can't help you if you don't reach out to us. We've got a bunch of education on our website. As I mentioned, we've got a bunch of education on our YouTube channel. But if you'd like to reach out to us, please email us, customerservice@nadex.com. We're here to help. We want to see you be successful. So, so we want to give you all the support that we can for you to potentially be successful. All right, I am now going to jump over and do the off-roading portion of this. Oh, you know something? Before I jump into the platform, this is the Nadex YouTube page. If you go Nadex YouTube and just simply Google it, I would recommend that you subscribe to our channel. Now, something that I mentioned, I mean, we've got a bunch of education that you can go through that's up here. Okay, in fact, this will be located in here as well. But if you look under videos, I'm going to click on videos, and you'll see we are constantly adding content. Every day we're adding content. Some of it is short as a minute, quick inspirational things. This is what I really wanted to show you, is if you're looking for hot spots in the markets, every morning for 15 to 20 minutes, we do a live stream. So if I go, instead of just looking at uploaded videos, I can go to past live streams. You can actually, oh, that's upcoming live streams. I meant to hit past live streams, sorry. You can go and see what we live streamed today. We actually went for 21 minutes today. I do this with a partner, Brian Caprice from Keep Trading Simple. But we do that every morning, 7:45 a.m. Central. So that's 8:45 a.m. Eastern. 8:45 a.m. Eastern, 45 minutes before the equities markets open. We take a look at what happened overnight, what might be coming up during the day, what markets are moving and where might there be some activity, and it might help you focus. And in fact, you can see what we spoke about each day, and it'll help you try to identify potential opportunities where you might want to jump in. And as I mentioned, we have upcoming live streams. You can see I've got them booked out for through next week, but you can even set reminders for yourself to, oh, let me know when they go live. But it's nice to know that this resource is available if you're new to the markets and you're learning how to look at the markets, how to do some technical analysis, how to look for what's coming up and how you might try to identify potential opportunities. We will give you the hot spots, and we do live analysis for folks who want to do some day trading in Nadex markets. Now I am going to jump over to the platform, and we're going to go here to the Nadex website, and I am going to log in. Now, if you do not have a demo account, again, I would recommend that you get one. You can practice trade. Your experience in a demo environment will not be exactly the same as a live environment. That is because in a live environment, we've got real people with real money trading. Not that there aren't real people in demo, but in a demo environment, people often do crazy things. They might do things that they wouldn't necessarily do in a live environment. It's just people practicing. And so when you're practicing, it's the markets you see will replicate what's seen in the live environment, but the experience will be different. All right, it will definitely be different. Now, I'm going to look at binary options. As I mentioned, we've got a variety of binary options. We've got equity indices. You can see we've got global equity indices. We've got contracts that expire, every hour, every couple hours, daily, weekly. So if you're looking to trade the S&P 500, here we go. I'm just going to bring this up real quickly. Yikes, I'm going to make this a 15-minute chart because it looks like I've got an awful lot on this chart. We do sessions, and I'm also going to take away all those strike prices so that we can see a little bit better. And I'm even going to take away some of these. By the way, if you want to learn how to use the platform, we do full-blown platform sessions where one of my colleagues, Adam McCaden, goes through all the functionality on the platform, how to use the platform. He even does sessions where he does specifically just on charts, how you can set up your charts with different time intervals, ranges, different technical indicators that are available, all of the drawing tools that are available to help you do some analysis for your trading. So he does a whole-blown session just on the charts as well. I'm not going to do that here, but I would recommend you could take a look. Again, on the YouTube channel, there's some historical ones. And if you take a look at the Nadex website, you can join one of the ones that's coming up. But you can see all the different strike prices that we've got, and you can see how you could make a determination. You can buy or you could sell. If I thought the S&P 500 were going to go higher, let's just actually, I'm going to do something here. Let's just take a look. I'm going to get some of this stuff out of the way so you can really see what I've got going on. All right. Let's just say I think my prediction is the S&P is going to finish higher today. I think it's going to go higher. So I might put a bid in for, say, 46. If I were going to, I'm going to move this down to 45 and a half. If I were to buy one at 45 and a half, it tells me I couldn't lose, I'm going to make this even a little bit bigger. I couldn't lose any more than 45.50. The most I would be able to make is 54.50. And it's now what's incredible is the probability, my max return. Well, I mean, look, and what this is calculating off of, it's calculating based on the midpoint between the bid-ask spread. So that's giving me the probability. And if I'm buying, it's going to tell me if I bought one at this price, what would my return be? It's not based on what I've got in the order ticket. Now, this is dropping very quickly, and you're seeing how these prices could change. It's a good thing I didn't buy one. Maybe I thought it was going to continue to go lower. Let's pick the strike price below it. And notice if I'm buying, it shades the chart in blue where it would need to finish for me to finish in the money. If I were to sell one, and I just moved this, let's just say I wanted to sell one and I sold one at 48. I wanted to sell one at 48. I know that I couldn't lose any more than 52 because it could go to 100. I can only make 48. But notice now my return, my ROI, it's calculating based off me selling one at the bid. All right, it's based on, and the probability of my success is going to be the midpoint of this 100 minus. Remember, I'm selling. So for my probability of selling, it's 100 minus the midpoint. If I'm buying, it's exactly the midpoint. So that's something that has tricked people, but it calculates your probability of it finishing in the money, the probability of in the money, based upon the midpoint of whether I'm buying it or whether I'm selling it. And as it's dropping lower, okay, let's just say I wanted to sell one at, boy, I just want to get a midpoint here. It's ticking around so quickly. You know why it's moving so quickly? Is there's only 8 minutes to go. And that is something that you will see. In fact, I will do an example of a 5-minute binary in a second, but I wanted to demonstrate. Let's move out to a daily contract. Okay, so it won't move as dramatically. Now I've got 3 hours and 23 minutes. I'm not going to get the crazy movements, but let's just say I'm looking here. Here's my condition, 45.7980, and I wanted to sell one at 39.25. Okay. Now my probability of success is higher because it's below. My return will be lower because I can only make 39 and I've got to put up 60. Now I'm going to place that order. Notice that my order is right there, my 39.25. Now, is someone going to trade with me? I don't know. This is a demo environment. Someone may, in a real live environment, someone may, I don't know. But I'm going to look and I've got my order down here. Now, if I wanted to change my order, I can simply click on it and too late, I can't change my order. Why can't I change my order? Because it traded. I actually sold one. Okay, I sold one at 39.25. Now, if I want to get out of the position early, oops, I didn't want to sell that at 39.25. I could click close and it would set me up to do a market order. It would just buy this order back. I would send a market order to buy it, and it tells me that I would only lose a few dollars. Now, what if I don't want to do that? All right. What if I want to actually set a profit target? Okay. I sold it at 39.25, and I think it might just come down a little bit before the end of the day. I still got plenty of time. I might want to buy it back down at 29.25. Okay. I could put I could try to buy it back for 29.25. Okay. And if I did buy this back at 29.25, I sold it at 39.25, I buy it back for 29.25, I'd make 10 bucks. So I'm going to go ahead and place that order. My order's been received. Okay. And now I'm going to go back, and here's my order, and here's that market. Here's my order to buy one. All right. I want to buy it at 29.25. Currently it's, you can see how this is ticking around. So I can set a limit order to buy it back for a profit, which is what I'm doing right here. We have that set profit target functionality where you can say, I'm willing to take this off for a partial profit, and I would say, thank you very much. Or I could simply just get out. Now, if this starts going against me and I'm uncomfortable, I could just simply close my order. And if I closed my order and took a $2 loss, I'd want to remember to go back and cancel this order, because I wouldn't want to buy it down here anymore because I would have closed my position. Now, the last thing I want to show you is we were starting to see this in the S&P. Let's take a look at the Euro USD, and we've got 5-minute binary options. Let's move down to a 1-minute chart. All right, I'm going to zoom in. I'm sorry, I wanted to get this real close. Okay, and now I do want to show these strike prices. I wanted to see all my options. As you can see, we've got 4.5 minutes to go. And I've got look how quickly the prices of these will move as the underlying ticks. This is right now right at the money at this strike. It's 50. If it starts punching above, this will start going higher than 50. Notice this out of the money one is only down at 18, right? But could it spike up there? It could. Maybe I think this is going to, it's actually backing down a little bit. I don't know what's going to happen, but you can see how quickly the price of these, if it starts going lower, this one that's currently around 75% will start dropping. Maybe I think it's going to go back up. So I'm just going to, for fun, buy one. I bought it. Okay, so I did buy one. The market's moving so quickly. I bought one for, yeah, and it immediately went against me. I bought one for 25.5. Okay, now as it's ticking lower, as you can see, it's ticking lower. It's going against me. Now, could I just dump it and take my losses? I could, or I can wait. I still have 3 minutes to see what could potentially happen. As it's going lower, it's not looking very good. In fact, this one that was currently at 50, now it's really just the bottom's dropping out. Look how quickly it's dropped. This one that was at 50%, it's now down below where I was on the one that I bought. And the one that was in the 70s is already, I mean, look how quickly that moved. I could have sold this one if I thought this were going to happen. I could have sold this one in the 70s and bought it back in the 40s and made $30. You see in the short duration binary options how quickly, and some people want this volatility. Some people want this price action, and you can see how quickly, look at this. I mean, this is crazy. This one had a chance. This one was 50%. This one was 70%. These ones were in the 90s. This was like a 90%. And it's not, I mean, it was almost, the market was saying near 100% that this was going, now it's only 80 because we don't know what's going to happen because in this short window, in this last minute, the price of the Euro USD dropped. If we stayed here, in fact, if you'd like, I'll go ahead and stick around. Let's just watch how this finishes in the last 2 minutes. And this is kind of important. I mean, that was a pretty dramatic move. I clearly am losing on my trade. In fact, I couldn't even, oh, look at that. While that happened, I actually made $10 on the other contract. That actually took me out. Yay, I made 10, but here it looks like I'm going to lose 20 because I couldn't even sell it. I mean, no one's going to want to buy it from me. If I wanted to try to sell it, could I try to sell it at $3.25? I could try to get $3.25 back. I don't think anyone's going to buy it from me. But you could try. You never know. Meanwhile, let's just see what happens. There's still a minute to go here. And wow, all three of these up here are basically zero. This one, oh, look at this. And this one down here that was 100, it's dropping right on through that now too. I got to move the chart. Let's move this. This is what can happen with short duration binary options. Now, what you are going to see is when there's about 20 to 30 seconds left, the prices will all go blank. And the reason they go blank is because in that last 20 or 30 seconds, no one wants to necessarily put a price out there that they're willing to trade on. Of course, this price won't move because I put it out there. And again, we're in a demo environment. Everything sort of went blank. Notice that with 20 seconds to go. And we don't know. And it looks like as we watch this continue to tick lower, every one of these is going to go and settle at zero. In fact, there's another, right? And the only one, there was one way down here. This might be the only one that finishes at 100. There it goes. It expired. It's done. Notice that contract's gone. And all of those. Now, if I want to come back to the markets, I can refresh. I've got a new set. What did I click on? That's what I want to click on. I've got a new set of Euro USD 5-minute binary options. I can bring my chart up and you could see all of the new strikes and the new prices for this 5-minute window. Okay, so this 5-minute window, and you could get into the action again. Some people want that short-term, high-velocity price action. Some people are a little uncomfortable with that because it's just a little too much. So they might choose not necessarily 20-minute binary options, but they might go and look in our indices. We can look out, refresh this because those expired. But you can see how we've got contracts. Here, let's look at the Euro US dollar because that's what we were looking at. We've got contracts that expire at 2 p.m., 3 p.m. These were daily 3 p.m. and 7 p.m. contracts. We got 11 p.m. contracts. We got contracts that expire in the morning. And then we've even got our weekly contracts. And you can make a determination on where you are most comfortable, what time frame. And remember, just because there's a time frame associated with the contract at expiration doesn't mean you couldn't trade it before expiration as the price moves around. I went a little long because I wanted to make sure we saw all those examples. I have answered all the questions that you sent in. I want to remind you again, please follow Nadex on YouTube. And remember, we do those morning analysis sessions every morning. Please come join us. Tell your friends. We love to have more people. 8:45 a.m. Eastern every morning. We live stream for about 15 to 20 minutes. We look at hotspots in the markets. This recording should be up later today, both on our YouTube channel as well as the Nadex website. Thank you so much for joining. Let us know if we can help you in any way by emailing customerservice@nadex.com, and good luck in the markets.